All right, so welcome back to Law and Crypto. My name is William Kraus, and I'm an attorney focusing on litigation, governmental investigations, and other disputes relating to digital assets and blockchain technology. We're going to do a standard recording soon, so you don't have to hear me say this each time, but this is a friendly reminder that while I am a lawyer, I'm not your lawyer. So nothing I say should be taken as legal advice regarding your specific legal situation or investment advice of any sort. I also need to make clear that everything I say is my personal opinion and not necessarily the opinion of my law firm. So if you do want legal opinions from me on a specific issue, feel free to contact me directly and see if we might be able to work together. So with that out of the way, let's start our discussion for today. So there's two items that I want to talk about, or rather two speeches. So first, the U.S. Treasury Secretary Janet Yellen gave a speech on Thursday at the American University regarding cryptocurrencies that I think is interesting and reflects a lot of what I've been talking about in my previous episode regarding the Biden administration's executive order on crypto. Second, the OCC, or the Office of the Comptroller of the Currency, gave some comments on Friday at Georgetown Law School regarding stablecoins that I think are also interesting and worth discussing as well. So maybe you're asking yourself, is this guy really going to, talk about two speeches today? Well, yeah, I am. The more we talk, you'll figure out, or you'll listen and hear that, presentations given by government officials to law schools, universities, even commencement speeches, or some, response to a question at a crypto conference can provide important signals as to what a federal agency is thinking and where policy is heading. In the area of law and regulation, it certainly doesn't begin and end with what's written in the law. And I'll talk about speeches and comments when I think they're important. So let's turn first to Secretary Yellen's comments. Now, some of you might be familiar with Secretary Yellen for a number of reasons. I'll bring up a picture here. This is her famously, the Buy Bitcoin sign in the background. And this was back in 2017. Back then, Secretary Yellen was the Federal Reserve Chair testifying before Congress regarding the U.S. economy. A few years later, she'd be appointed the Secretary of Treasury by President Biden. And to be clear, the U.S. Treasury has an important role to play in the regulation and adoption of digital assets. And as I mentioned last week, the Biden EO on digital assets actually directed the Treasury, along with about 20-something other federal agencies, to do quite a lot in terms of studying and developing policy in this area. So what are some of the things the Secretary of Treasury should be doing? Well, the EO directed that the department needs to coordinate with other agencies to submit a report on the future of money and payment systems, including an analysis of a potential US CBDC or central bank digital currency. And the Treasury was asked as well to report on what would drive mass adoption of different types of digital assets. That mass adoption part's an actual quote, and the risks and opportunities along with that adoption. And then, there's a number of other things. There's also a law enforcement prerogative. Treasury was directed to work with other LE agencies regarding the role of law enforcement in detecting, investigating, and prosecuting criminal activity related to digital assets. And a quick aside, you might be thinking, what does Treasury have to do with law enforcement? You might not know this, but the Secret Service is actually a component of the U.S. Treasury. And a large part of what they do is law enforcement around U.S. financial and payment systems. But I'm digressing a bit. The point is, Treasury will have a role in crafting policy in a number of key areas related to U.S. regulation of digital assets. Now, with that backdrop, what the Secretary of Treasury says about crypto, wherever that might be, or the context, whether in a speech or formal comment somewhere, is very important. We should pay attention. So what has Secretary Yellen been saying? Well, I think it's important to sort of look over a timeline here to see where she started and where we are now. And to be honest, more often than not, the comments have actually been pretty okay for crypto. In 2014, she told the Senate that the Federal Reserve doesn't have the authority to supervise or regulate Bitcoin in any way. That was actually largely in response to a letter that Senator Joe Manchin of West Virginia had sent right around then, February 2014, basically calling for a broad federal crackdown on Bitcoin and other cryptocurrencies. In 2015, she said that regulators need to be careful not to stifle innovation. Okay, that's good. In 2017, Yellen also described blockchain as a very important new technology that could have implications for the way in which transactions are handled through the financial system. She added that blockchain could make a difference to the way in which transactions are cleared and settled in the global economy. But then in 2018, she said regarding Bitcoin, I'll just say outright, I'm not a fan, adding that very few transactions are actually handled by Bitcoin, and many that do take place on Bitcoin are illegal, illicit transactions. Now, whether that's actually the way she feels, or something that just kind of came about in the wake of the market crash that we would have been seeing right around then after that 2017 run up to Bitcoin's previous all-time high, remains to be seen. But that's a sort of negative comment that's in the mix as well. So then in 2021, then as the Secretary of Treasury, she made a little bit of waves by saying that she thought stablecoins could promote efficiency and easier payments in the financial system, but required regulation. So we've got some good and we've got some bad. Where are we today? Well, on Thursday of last week, Secretary Yellen gave a speech in which she laid out what she described as 5 lessons that apply as we navigate the opportunities and challenges posed by these emerging technologies. I've got a link for you to the transcript in the description below, but let's pull it up here so you can see. All right, so here we've got the remarks just prepared, and then we get to the 5 lessons. And what's the first lesson? Our financial system, benefits from responsible innovation. Let's think about that term, responsible innovation. If any of you were watching last week, you might remember the term responsible development, with that being right in the title of President Biden's executive order on ensuring responsible development of digital assets. I had then said that I thought responsible development is really just another way of saying that regulation can work alongside innovation. That the Biden administration was therefore saying to industry, to its agencies, to the world, in fact, that the United States wants to be a leader in regulation of digital assets. Now, against that backdrop, it's not surprising that responsible innovation was our first major point, as that's emerging as what I think to be the key driver of US policy regarding cryptocurrencies. Responsible development, responsible innovation, any way of saying the government wants to sort of promote investment, entrepreneurship, bring some law and regulation in the space at the same time. She went on to describe what she meant a bit more, and I encourage you all to read this. But what she said really just tracks the EO and her past comments, I think. And in fact, there's a couple of notable points in which she describes the technology as transformative, which isn't something that gets thrown around very often when you're talking about cabinet level government officials. I mean, usually the text is sort of much more sort of muted, but words like transformative, I think, are important. So, when looking at that, I think there's been some good, observations to be made here. Kristen Smith, for example, of the Blockchain Association, made a really good point in which she said that this responsible development line of thinking at a macro level really just reflects a shift away from, I think, the FUD that we've been hearing coming out of a lot of politicians recently. I mean, if you're in the space, you know what I'm talking about, the same old tired stuff about energy consumption, Russian money laundering, sanctions, et cetera, et cetera. A lot of negativity there, but I think, the executive order and its agencies are sort of shifting, a little bit away from that. And I think those little movements and the signals are important. Sure, there's a nod to some of that stuff, I'll admit in the EO, keep everyone feeling like they've been heard, but the prioritization in my mind is clear. Growth and leadership and innovation. So that was the first lesson, the intro. And, with many things, the opening and the closing are the 2 most important parts. So what's the closing? Well, let's scroll down to the end here. Excuse me. We need to work together to ensure responsible innovation. So, basically just a variation of the same message. And let's talk for a minute about what she said. So, she said people have a wide range of views when it comes to digital assets. On the one hand, some proponents speak as if the technology is so radically and beneficially transformative that the government should step back completely and let innovation take its course. On the other hand, skeptics see limited, if any, value in this technology and associated products and advocate the government takes a much more restrictive approach. I think that's a good way of summing it up. Such divergence of perspectives has always been associated with new and transformative technologies. She went on to summarize, in my view, the government's role should be to ensure responsible innovation that works for all Americans, protects our national security interests and our planet, contributes to our economic competitiveness, Such responsible innovation should reflect thoughtful public-private dialogue and take account of the many lessons we've learned throughout our financial history. Now, that part's important. Now, like I said last week, whether you're for or against crypto regulation, you can't really deny that regulation is here and that much more is coming. The key part of that excerpt to me is that the Secretary of Treasury is signaling that private actors need to have a seat at this table when it comes to developing policy. Crypto businesses, the developers, the industry groups, the lawyers, the individual investors, entrepreneurs, et cetera. And maybe some folks, think that they don't want to engage here, that the government doesn't understand this technology, they never will, whatever. And this speech recognizes that those views are out there. I mean, and listen, I'll be the first to say that the government doesn't get it right all the time. And while some people in government really do get this stuff, others definitely don't, and we need to educate them. And what this says to me, and I think people are starting to realize, is if we want to see smarter policy and regulation, the crypto community needs to be willing to engage here, educate, and help craft this policy, in a way that makes sense. And in fact, we've seen the power of this engagement before. I mean, let's take a second and think back. Some of you might remember back in December of 2021, just before everyone was set to go on holiday leave, and a few weeks before Biden's inauguration, new leadership was put in place. A 72-page notice of proposed rulemaking was released by FinCEN. That's the Financial Crimes Enforcement Network, that would have greatly expanded the regulatory burden on banks and money services businesses related to self-hosted wallets. Now, the comment period was 15 days, as opposed to the normal 30 or 60 over the holidays, leaving at most 7 business days for comment. And I think it's important to understand what the comment period really is. I mean, these agencies will come out with rulemaking, and it's really sort of this period of time in which, the banks, financial institutions, industry groups, whoever, have an opportunity. I mean, even you, me, to go submit their views on the proposal in a way that will, be heard by the agency, and then hopefully will help craft the rulemaking. So to leave 7 business days for comment is really symbolic, as well as trying to do it right before a new administration takes over, and again, over the holidays. Now, what happened? Nearly 7,500 comments were submitted. Now, for the sake of comparison, it's been reported that less than 4,000 comments had ever been submitted in response to FinCEN proposals and notices in the preceding 12 years. Think about that, 7,500 comments over the holidays for 7 business days, as opposed to 4,000 in the preceding 12 years. And the commenters were great. I mean, they included a number of heavyweights, Fidelity, US Chamber of Commerce, Coinbase submitted some thoughts, and they were backed by thoughtful and compelling legal analysis. And FinCEN later announced the comment period would be extended. And ultimately, the Biden administration halted all of this last-minute rulemaking, including this one, just hours after taking office, which was trying to be pushed through by the outgoing administration. So I think my view here is, and the point I'm trying to make is, this community has power, you need to think that the U.S. government, you need to realize the U.S. government is saying right now, help us understand this stuff. Work with us. And that's really significant. And no matter how you feel about it, there's an old saying, I think it was Ralph Nader, if you don't turn on to politics, politics will turn on to you. So that's my PSA for today. Engage here. Help create the policy you want to see, which gets me to sort of a second point highlighting this. So we had these comments from Secretary Yellen on Thursday. And then on Friday, we had this speech from the acting comptroller of the currency. Now, what's the comptroller of the currency? Well, that's generally an organization that's tasked with the regulation and supervision of banks. And why is OCC relevant? Well, OCC touches on crypto in a lot of different ways. For example, they decide whether the banks can provide cryptocurrency custody services to its customers, what banks do in terms of sort of regulation and how they address when a customer is involved with crypto or has a crypto business, and deciding what role, if any, that things like stablecoins should have in the banking system, right? If we think stablecoins are a sort of superior way of transmitting funds, better than sort of the cross-border transaction systems which exist now, like SWIFT, for example, this is really important to understand that OCC is going to have a direct role in what the US banks can do here. So on that last note, Friday's speech was focused on stablecoins, and this is an area that's been under intense regulatory scrutiny recently. And I trust, all of you know what a stablecoin is and how significant they are in the industry. And I also trust that you're familiar with the usual attacks on stablecoins. For example, they're not transparent enough, or, there could be a run on stablecoins, et cetera, et cetera. So let's talk about the OCC speech for a little bit, because I think it's an important sort of counterpoint to what Secretary Yellen said, sort of, illustrates this growing divide, I feel, between cryptocurrencies and stablecoins with regard to US policy, and importantly, what I think can be done about it. So, we had the introduction in Secretary Yellen's comments of, responsible innovation. And what's the intro here? Well, basically right off the bat, it's protecting people. So, I mentioned with regard to the EO last week, in these things, these speeches, these orders, every word is very, very carefully selected. And I said that, the EO wasn't, protecting people. The EO wasn't titled, the executive order on, stemming the risks of, cryptocurrency and illicit finance or something like that. It was about innovation. So right here, when your intro is protecting people, that gives a pretty strong signal as to where we're going. So the acting comptroller starts by mentioning that the overall size of the cryptocurrency market is around 2 trillion, adding that stablecoin support that entire market. Again, we're setting this up here. He says that roughly 80 to 85% of trading and lending in crypto platforms involves stablecoins. That was apparently taken from some notes from SEC Chairman Gensler. And he says that the relationship can be depicted as an upside down pyramid with 2 trillion worth of crypto resting on, let me scroll here so you guys can see it, roughly $180 billion of stablecoins. He says conceptually, that's not too dissimilar from the United States' $23 trillion economy being supported by 2.4 trillion of capital, Instability at the bottom of the pyramid, and let me just stop for a second. Whenever a financial regulator or government official is using the term pyramid, it's probably not a good thing. But at the bottom of the pyramid is likely to cause the entire pyramid to become unstable. If there were to be a run on stable coins, the entire crypto economy would likely be impacted, causing outsized losses for ordinary people owning crypto and potentially leading to a host of other knock-on effects. So he goes on to then talk about what will serve as the base currency for trade and finance in a blockchain-based digital economy, kind of like the US dollar standard, if you will. And this is interesting. He has this part here where, it basically says, to be clear, the rise of Web3 and blockchain-based digital economy are not inevitable. And he says that, several observers have made thoughtful and credible arguments questioning the value proposition and long-term sustainability of cryptocurrencies and Web3. I find many of their arguments to be compelling. Now, that's interesting. So if you go and you look down here at footnote 8, which is sort of what he's citing, that's talking about a Fortune article in which we're basically describing a disagreement between Signal CEO and the Ethereum founder. And then we're talking about, an article or a podcast that was written, and then, podcast that was out there. And then also this 2-hour, highly crypto critical YouTube video. I'm not knocking YouTube videos, but, needless to say, to call these things compelling, that's kind of unusual for, high-ranking governmental official to have that as your authority cited, in your speech, a YouTube video that's basically like a crypto takedown. So he then gets into what he calls the architecture of the USD stablecoin system and what he thinks is needed. And apparently he's leaning towards stablecoins to fall under bank regulation and supervision, as well as a fixed set of safety and soundness requirements. So in other words, he seems to be calling for a single set of bank-like requirements across stablecoins, as opposed to variability for each major stable, saying, I'll see if I can find where he said this, right here. Actually, no, that's not it. No, sorry. So yeah, he's talking about sort of right here, this key phrase. And essentially what he says is, while there are pros and cons to consider, in my experience, the wider the variability, the more likely a risky issuer blows itself up, sparking contagion against his peers. And forgive me, I'm still trying to figure out this whole, live YouTube thing where I'm putting stuff up on the screen. So bear with me a little bit. But, this is important. I mean, he's talking about issuers blowing themselves up. He's talking about pyramids, unsoundness, instability. All these words are really important, protecting people. He then levies a critique against stables that exist on multiple blockchains, saying that cross-chain solutions have proven to be highly vulnerable to hacks. And he takes issue with the fact that there isn't interoperability between certain stables. And all the while he's citing this sort of this pre-Civil War period of banking, back when various states and, even companies had their own currency. And he's essentially saying that the current system is like every sort of state having their own dollar, and speculative, and it's prone on runs and collapses. And what we really needed all along was a single US dollar. Therefore, we need this single, set of guidelines applicable to every stable, regardless of what might set it apart in the market, or, utility or something like that. They all sort of have to conform in some way to this regulation. So he goes on to discuss various risks. Coming back to the banking system as the solution. And, for example, stablecoin activities, being conducted in a standalone bank chartered entity is one of the things he proposes. And I'll then leave you with the paragraph from the conclusion and get all the way to the end. He says, the future of digital assets is challenging to forecast. Today, cryptocurrencies are used primarily for trading on exchanges. Tomorrow, they may collapse and exist only on the shadowy peripheries of the financial system, or they may grow and power the next evolution of our digital lives and digital economy. This uncertainty or the uncertainty creates challenges for policymakers as well as financial institutions. Again, very, very telling language there. So why take this view? I think a large part of what the acting controller or comptroller is doing here is responding to a wave of legislation which has been introduced recently regarding stablecoins, and really sort of staking out the OCC's position that, not surprisingly, the OCC should have the most power here. So what is some of that legislation? Last week we actually had Senator Patrick Toomey, who's a fairly pro-crypto politician and a leading member of the Senate Banking Committee, introduced the Stablecoin Trust Act, TRUST. They always got to get those acronyms in there, and that stands for the Stablecoin Transparency of Reserves and Uniform Safe Transactions Act of 2022. And that set forth a couple paths for stablecoin issuers to be licensed, for example, through the OCC or through the states and their sort of like money transmission licensing regime, or maybe a traditional bank charter. And just a few weeks before that, Senator Bill Hagerty introduced the Stablecoin Transparency Act. Now, both of those acts, I think, actually are pretty pro-innovation. They talk about not stifling innovation and giving options for stablecoin issuers, and you can do this or you can do that. And I think that's important. That's a good counterpoint here to the OCC's apparent position, which is more the sort of like one-size-fits-all thing, which I don't really think is particularly pro-innovation, in my opinion only. And yet, there's still more voices. Senator Lummis, who's also been a really pro-crypto politician, said to be working on her own legislation. And this has actually been going on for quite some time. Some of you might remember the Stable Act of 2020, which had all sorts of issues. That never really went anywhere. But right there, that's 4 different bits of legislation over the last 2 years regarding what to do about stablecoins. And it's a hot topic, and that's kind of been that way for years. The Stable Act kind of came out in the wave of Facebook stablecoin, and I can't remember if it started as DM or Libra, but whichever was first, that really kind of set off all sorts of legislation, hand-wringing, and discussion about stables and their importance to the market and what do we do there. So what's going to happen next? I think it's tough to say. This is a really hot topic, and you have the OCC framing their view here, and there's legislation, and there's even open questions as to jurisdiction. I mentioned last week in the EO, a big thing that was kind of coming together now was agencies saying, well, we regulate this and this other agency regulates that. We really don't even know right now, conclusively, and we can't really say conclusively in all cases, are stablecoin securities, or are they not? Are they under the SEC? Are they not? And even some of this legislation tries to draw lines around that, conclusively saying, for example, that they are not securities, subject to the oversight of the SEC. So what am I saying here? This sort of goes back to, I think, a overall macro view. I think at a high level, we're shifting away from some of the FUD that we've been seeing, at least from the executive branch, these federal agencies. But I think that within that shift, there's also sort of this tension, right? On the one hand, I think there's this sort of cryptocurrency, if you will. And by that, I mean non-stables like Bitcoin. And I think there's this view that this stuff is good and, we need to develop it and, innovation and bring people here and, developers and all this stuff and, forward-looking sort of positive view on cryptocurrency, maybe because it's sort of inescapable, right? Like it's here to stay. But then on the other hand, you've got the views on stablecoins, which I think are much more critical. And that doesn't necessarily, align with that positivity. And I think that there's this tension between innovation and regulation. And while on cryptocurrencies, I think the balance shifts a little bit more towards pushing innovation. On stablecoins, I think the balance is sort of, pushing more towards regulation. At least that's what people are saying right now. But again, this all comes back to the same place. My view is that the crypto community should be engaging here. If you think that one politician or official or federal agency has a right, then support that. Now, if you think another has it wrong, vote, fundraise, write letters, do what you can to shape the narrative. And in fact, there are a number of great organizations out there that are already doing this. I had mentioned the Blockchain Association as one of them. They're doing some great work, and they are sort of acting as a sort of a leading voice for the crypto lobby, if you will. And it couldn't be more clear to me that the discussions that are taking place right now in this moment in time are going to impact policy and guidance and regulations for years to come. It's crazy to sort of step back and look at everything and say, like, right now, this is happening. And it's all kind of coming together. last year, this year, next year, maybe next 2 years. But if you want to see the crypto policy you want in the world, get out there and engage with this stuff. And that's my thoughts for today. I hope you enjoyed our second talk. Feel free to leave your thoughts in the comments below. We still don't have a better name than Law in Crypto, and that's on me. So I'm hoping you guys work some internet magic and help with that. Help us find a better name. In the meantime, I hope you enjoyed the show, and look forward to talking with you again soon. Thanks.